This is the Streetwise 2025 Canadian Mortgage Market Outlook. We're talking about a new market and new opportunities. As 2024 draws to a close, we're observing several significant shifts in Canada's mortgage and housing landscape. These changes warrant careful consideration as they may represent new opportunities for both homeowners and real estate investors. So let's dive into what's changing and why it matters to you. The timing could not be better. Consumer confidence is at 30-month highs as interest rates begin their descent. This renewed optimism, combined with upcoming policy changes, set the stage for an active real estate market in 2025. The Bank of Canada has implemented a significant rate cut in October. That was the most substantial single decrease since 2020. Market analysts anticipate that this could mark the beginning of a broader rate reduction cycle extending through the year of 2025. This will have potential implications for both existing mortgage holders as well as prospective home buyers. Immigration and population. While recent headlines focus on adjusted immigration targets for 2025 and 2026, it is important to understand the bigger picture. Even with these adjustments, immigration remains at historically significant levels, second to 1913. More importantly, our current housing demand isn't just from newcomers. We have a substantial backlog of established residents waiting to enter the housing market. Population growth is setting new records with a national population growth of 3% and regional variations showing Alberta at 4.4 and Ontario at 3.2. This demographic expansion, coupled with sustained below-average housing starts, has generated considerable demand from both existing residents and established immigrants who have accumulated down payments while renting. And here is a big one: insured refinancing is making a comeback. Starting January 15th of 2025, homeowners will have an exciting new way of accessing their home equity while helping address Canada's housing shortage. For the first time since 2016, you will be able to get an insured refinance that will allow you to tap into a higher loan to value of an equity takeout. But wait, there is actually a catch. The catch is that the funds must be used to create additional housing on your property. Here are the basics. You can borrow up to 90% of your property's after improvement value. This is applicable to properties valued up to $2 million. You can get up to a 30-year amortization to repay the loan. And you have to use the money that you take out to build one of the following secondary living spaces, such as a basement apartment, a laneway house, an above garage suite, or a self-contained living unit or units. And the key requirements are the following. You must already own the property. Either you or a family member needs to live in one or more of the units, and the new units that you're creating must be properly zoned and must be fully self-contained. The program does not allow short-term rentals for the new units, and you can create additional units as long as the total units on the property do not exceed 4. Why does this matter? Well, this program offers a unique opportunity to access your home equity with a lower down payment, meaning a higher loan to value. You can create rental income to help with your mortgage payments. You can add a valuable living space to your property. You would also contribute to addressing Canada's housing needs by adding extra units to your property. If you want to learn more about how this program can work for you, reach out to us for a personalized consultation and to walk you through the options. Now let's talk about housing supply. We are seeing the lowest number of new single-family homes permits in decades. With our growing population, these new mortgage policies are especially important for both homeowners and investors. Now let's talk about the market dynamics. Home sales have been slower than usual since 2022, which means that there are many waiting buyers that are sitting on the sidelines. As mortgage rates start to drop and as these new policies come into effect, we expect to see more buying activity. Keep in mind that when rates change, the market usually responds faster than when the population changes occur. So, what's your next move? Well, big changes, as you've heard, are coming into the market in 2025. So, whether you're looking to add new rental units to your property or considering growing your portfolio and acquiring more properties, or if you want to stay ahead of these changes, this is the time to plan. This is the time to be ahead of the game. Every situation is unique, and we are here to help you navigate what makes the most sense for your portfolio. So, let's talk about how to make these new rules work for you. Reach out to us at info@streetwisemortgages.com. Stay streetwise.